All right, listen up, because what I'm about to tell you is going to completely change the way you think about money, gold, and the entire financial system. And honestly, when I first heard this theory floating around, I thought it was just another conspiracy theory, until I actually dug into the numbers and realized there's something seriously disturbing going on behind the scenes. So there's this wild idea that's been circulating in precious metals communities, and it goes like this. The United States, sitting on $36 trillion in national debt, could theoretically solve everything overnight by simply revaluing gold to something like $142,000 per ounce. And you're probably thinking that sounds absolutely insane, right? But hold on, because the logic actually makes a twisted kind of sense on paper. See, central banks hold gold in these things called gold revaluation accounts, which means they can technically change the official price whenever they want, and boom, suddenly trillions of dollars appear on government balance sheets without issuing a single new bond. But here's where it gets really interesting and honestly, kind of terrifying. I spoke with someone who's been tracking these markets for decades, and they immediately shut this idea down. Not because it wouldn't work mathematically, but because of what would happen next. And trust me, you're not going to like this answer. If gold suddenly became worth $142,000 an ounce, every single person, government, militia, and criminal organization on Earth would instantly become obsessed with one thing: getting their hands on as much gold as possible. And we're not talking about a peaceful transition here. Think about it for a second. Right now, gold is valuable, but manageable. But if you suddenly made it worth that much, you'd create the most dangerous commodity in human history overnight. And what happens when something becomes that valuable? People stop working normal jobs, economies collapse, and suddenly the only thing anyone cares about is controlling gold mines, gold vaults, and gold trade routes. And this isn't just theoretical fear-mongering either. Throughout history, we've seen wars break out over resources that were far less valuable than what we're talking about here, from oil to diamonds to rare earth minerals. And every single time, it leads to conflict, instability, and massive human suffering. So now imagine that on a global scale, with every nation scrambling to seize gold reserves. You'd have countries invading each other, militias taking over mining operations, and theft and violence becoming the norm, not the exception. And honestly, I think the worst part is that it would never end. Because once you've created that level of value concentration, there's no going back, and the chaos would just perpetuate itself indefinitely. But wait, there's another layer to this that makes it even worse, and this is where human psychology comes into play in a really dark way. When a single commodity becomes that valuable, currencies start to lose all meaning, because why would anyone accept paper money when they could demand payment in gold? And suddenly you've got hyperinflation spreading through every other asset and good, because nothing else can compete with gold's value. Food prices skyrocket, housing becomes unaffordable, and basic services break down because the entire economic incentive structure has been demolished. And here's the kicker: this wouldn't solve the debt problem at all, because while the government might technically have more valuable gold on paper, the actual economy would be in complete free fall. So congratulations, you've just traded one crisis for 10 worse ones. Now, this is what experts call an endgame scenario, something that looks good on theory but is absolutely unworkable in practice, and no serious government would actually pursue it because the consequences are just too catastrophic. But the fact that people are even discussing this tells you something important about how desperate the financial situation has become. Alright, so if that extreme gold revaluation idea is off the cable, let's talk about what's actually happening with gold right now. And this is where things get genuinely suspicious. There's serious questions about whether the United States actually has all the gold it claims to have. And I know that sounds like tinfoil hat territory, but hear me out because the facts are pretty damning. Fort Knox and Federal Reserve vaults supposedly hold thousands of tons of gold, but there hasn't been a full, transparent, independent audit in decades, and every time someone asks for one, they get stonewalled with bureaucratic excuses and national security concerns, which honestly just makes it more suspicious. Some policymakers have proposed creating gold-backed treasury bonds, instruments that would be redeemable in physical gold after a certain period. And on the surface, that sounds like a way to restore confidence in the dollar. But experts warn this could backfire spectacularly if the gold isn't actually there or if too many people try to redeem at once. Think about it. If you promise people gold and then can't deliver, you've just confirmed everyone's worst suspicions and triggered a crisis of confidence that could collapse the entire system. So it's a high-stakes gamble that most governments are understandably reluctant to take. But here's where it gets really interesting, and this is something that doesn't get enough attention in mainstream financial media. Countries around the world are quietly bringing their gold home. Germany, Austria, India, and several other nations have been repatriating their gold reserves from storage facilities in London and New York. And this isn't just a random trend. It's a clear signal that trust in Western custodians is eroding. These countries are essentially saying, we don't trust you to hold our gold anymore. We want it back in our own vaults where we can see it and control it. And honestly, can you blame them? If you're a nation holding significant gold reserves and you're watching the financial system become increasingly unstable, wouldn't you want physical possession of your assets rather than just a paper promise that they're sitting somewhere in Manhattan or the City of London? This trend is accelerating, and it's putting pressure on institutions like COMEX and the London Bullion Association. And this brings us to the heart of what might be the biggest fraud in modern financial markets. The way gold and especially silver are priced today has almost nothing to do with physical supply and demand, and everything to do with paper contracts that rarely result in actual metal changing hands. And when I say paper contracts, I mean futures, options, and exchange-traded funds that claim to represent physical metal, but are really just financial instruments that can be cash settled. On any given day, billions of ounces of silver trade on paper markets, which is absolutely absurd when you consider total annual global silver mine production is only around 800 million ounces. So we're talking about trading multiples of the entire year's supply every day. And most of these trades never involve anyone actually saying, I want the metal delivered to my warehouse. And this creates a massive disconnect between paper prices and what physical silver is actually worth. The London Bullion Association supposedly holds hundreds of millions of ounces of silver, which sounds like a lot until you realize that most of it is already spoken for. It's owned by ETFs, it's committed to industrial users, or it's otherwise encumbered. So the actual float of silver that's available for immediate delivery is much, much smaller than the official numbers suggest. Some estimates put the truly unencumbered physical silver at only a tiny fraction of what's claimed. And if that's true, then we're looking at a system that's leveraged to an absolutely insane degree, like a bank that's loaned out 10 times more money than it actually has in the vault. Now, this is where opinions start to diverge a bit, and it's worth exploring both perspectives because they both have merit. On one side, you've got people who believe that foreign actors, particularly Eastern nations, are deliberately and strategically draining Western gold and silver reserves, slowly accumulating physical metal while the West trades paper contracts. And they're doing this quietly to avoid triggering a panic that would expose the whole scheme. On the other side, you've got people who think this is less about geopolitical strategy and more about profit-driven manipulation by hedge funds and banks who make money by pushing prices up and down in predictable cycles, shorting silver when it rises, covering when it falls, and pocketing the difference. Personally, I think there's probably truth to both views because markets are complex and different actors have different motivations. But regardless of who's doing what and why, everyone seems to agree on one thing. The system is fragile, it's heavily leveraged, and it's not sustainable long term. Let me give you some numbers that really drive this home, because when you adjust silver prices for inflation, the picture becomes even more disturbing. Silver hit its nominal high of around $50 an ounce back in 1980, but if you adjust that for inflation using today's dollars, that peak would be somewhere between $140 and $150 an ounce, and silver today is trading at what, $25, $30? That means silver hasn't just failed to keep up with inflation, it's been absolutely crushed, and this is supposed to be a precious metal that historically has been a store of value and an inflation hedge. So either silver has somehow become fundamentally less valuable over the past 40 years, which doesn't make sense given industrial demand has exploded, or something is artificially suppressing the price, and I'll let you guess which explanation makes more sense. The pattern is always the same. Silver starts to rise, momentum builds, retail investors get excited, and then suddenly it gets slammed back down with massive short positions that appear out of nowhere. And this has happened over and over again for years. Some people call it manipulation, others call it market making. But whatever you want to call it, it's clear that silver's price doesn't move freely based on supply and demand like it should in a fair market. Now here's the really scary part, and this is what keeps precious metals experts up at night. What happens if there's a delivery crisis? Imagine if a bunch of large wholesalers, industrial buyers, and bullion dealers all decided at the same time that they wanted physical delivery instead of cash settlement, maybe because they've lost confidence in the paper system, or maybe because they actually need the metal for production. It doesn't really matter why.
If that happens and enough people demand delivery simultaneously, the entire paper market could fail almost overnight because there simply isn't enough physical metal to cover all the claims. And at that point, you'd see forced cash settlements, delivery failures, and a complete collapse in confidence in institutions like COMEX and the LBMA. The paper price would become meaningless because nobody would trust it anymore, and the only price that would matter is what someone's willing to pay for actual physical metal that they can hold in their hand. And I guarantee you that price would be dramatically higher than what the paper markets are showing right now. And this isn't just speculation either. We've already seen hints of this dynamic playing out on a smaller scale. There have been delivery delays, premiums for physical metals spiking above paper prices, and whispers of vaults running low on inventory. And each time it happens, the system manages to paper over the cracks and keep going. But the cracks are getting bigger and the paper is getting thinner. The question isn't really if this system will eventually break, it's